Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, July 23rd. Today on the show, the federal government is looking into whether Moonshot AI is using advanced American-made chips. We'll talk to the Information's tech and politics reporter Leo Schwartz, who broke that story. We've then got some quarterly results to unpack. Google and Tesla reported it was CapEx galore. Investors in both companies were unnerved. We'll talk about both those earnings calls shortly. We'll then unpack our reporting on Stripe's latest financials. And to close out the show, we've got a closer look at Anthropic's unusual stock plan for its employees ahead of its public debut that we are anticipating to come very soon in the months to go. It's going to be a great show, so let's get right on into it. The Information has exclusive reporting that the U.S. government is looking into whether or not Moonshot AI, the maker of Kimi K3, is using top AI chips from American companies. U.S. chip exports have, of course, been a highly regulated issue for years now. I want to bring on Leo Schwartz, our AI and politics reporter, to unpack his reporting for us. Leo, welcome back to the show. It's great to have you here.
Thanks for having me.
Nice shirt.
You too. Good color.
Mine's half sleeve though, so it's a summer linen, and the summer of tech policy indeed in the land of AI. What do we know about what the U.S. is investigating with respect to chips and Moonshot AI?
Yeah, it's the summer of the open source battle over AI. As you know, there's been weeks of speculation about whether DC and the Trump administration is going to crack down on this rise of Chinese open source. A lot of people are worried that labs like Moonshot, which develops Kimi, are creating these models that will challenge Anthropic and OpenAI. And there's been a lot of uncertainty about what the White House response will actually be. Will there be a ban of these Chinese models? Will there be restrictions? Yesterday was really the first shot by a Trump administration official, Michael Kratsios, who's the director of the Office of Science and Technology Policy, did this pretty shocking post on Twitter, or X, I should say, where he accused Moonshot of distilling or essentially stealing Anthropic's information to train its model. What we discovered in our own reporting is that behind the scenes, the Commerce Department's Bureau of Industry and Security, which basically handles all export controls of sensitive technologies, has been investigating this issue of basically whether Moonshot, a Chinese company, and other Chinese companies have been illegally or improperly using U.S. advanced chips from companies like Nvidia to train their models. But there's an interesting layer to this story, which is that when Michael Kratsios made his post, he wasn't doing so with information from Commerce and their investigation. The investigation is still ongoing. We report if Commerce is going to take any action, it would need to be completed. And basically the upshot of all of this is that there's a lot of division within the Trump administration on how to handle it. There's a lot of confusion even in between the different agencies on how to act.
And sorry, Kratsios' tweet, it was that they had evidence that they were distilling, or that he thinks that maybe they were distilling?
Oh, so Kratsios was pretty clear. It said, we have information.
We have information,
Moonshot,
okay.
Yeah.
But
Moonshot
it was
distilling Anthropic.
it would be separate information then, presumably, from the information that you are citing in your own reporting. So we've got sort of two different lanes here of the government pursuing this issue.
Yeah, so this information would come from the Bureau of Industry and Security under Commerce, which does investigate export control violations. But the information that Kratsios was going with was not from BIS.
Right. And so, I mean, let's just talk about the consequences here. So if it does come to be found that Moonshot AI was using chips that they were not allowed to be using, these would presumably be the chips above and beyond the threshold of we know that export controls have been a big topic. The H200s were sort of the most advanced chip that they were allowed to sell. So we don't know exactly what chips they are investigating them using. But if it gets found that they were using it, then what happens? What's the consequence?
Yeah, so Kratsios at least accused Moonshot of using these more advanced Nvidia chips through Thailand. And as our colleagues have reported, there are these intricate chip smuggling rings, or at least ways for Chinese companies to try and circumvent those restrictions. I think all this is being figured out in real time. But the upshot of this is that if the Bureau of Industry and Security does determine that Moonshot was violating export controls by training its model using these prohibited US chips, that could result in different actions. One that's being considered is something called the Entity List, which is basically a designation that other Chinese companies like Huawei are already on, which would mean that these foreign companies are blocked from accessing any further US tech. That could even mean cloud services. And that's something that's on the table. Although, as we reported, these discussions are very preliminary and obviously would require this investigation to play out. So, whether that is one option that the Trump administration pursues against Moonshot or other Chinese labs remains to be seen.
So entity list, that means it's a restriction on what the companies on the entity list can access in the US. Would it at all mean anything in terms of US customers accessing the tech in China or wherever the entity list is from?
So theoretically, it wouldn't. This is focused on how foreign companies can access US tech. But at the same time, when you look at how BIS treats companies on the entity list, it's essentially putting a red flag on it. And there's all sorts of other reasons that a US company might be dissuaded from interacting with a company on the entity list. And I think something else to keep in mind here is that a lot of this is very legally novel, this idea of software companies being restricted in these ways. A lot of these rules are written in mind more for things like weapon manufacturers or actual hardware. So I think agencies like Commerce, like BIS, and like the Office of Science and Technology Policy are really figuring this out in real time.
So the entity list is one option. Are there other consequences that they're considering at all?
Yeah, so after Kratsios posted on X about the information the government has about Moonshot, Scott Bessent, who is the Treasury Secretary, did a quote tweet. I don't know if we call it a quote tweet anymore, a quote post,
Quote
and
posts.
basically a quote post sounds less fun. And basically said that the entity list is one option. Another is sanctions, just sanctions in general. And there weren't more specifics there. But this just goes to show that the Trump
Would
administration
That
is
that that
certainly
that
weighing out.
sounds like it would be a more serious consequence, though.
Yeah, I mean, we don't know if sanctions would be monetary, if sanctions
Right.
means restrictions from who in the US can actually access these models, but that certainly is a big fear among a lot of both US companies trying to access the models and US open source developers.
So we've been tracking this issue now on the debate that Silicon Valley and DC are having around how to respond to Kimi K3, to the power of open weight models that have been developed abroad. The idea, should there be regulation against models developed overseas, regulation against open weight models, period? What have been the developments on either side of that debate in the last 48 hours? Where do people stand on this now?
There's a really interesting division line being drawn between people defending open source in general. Obviously, there's a lot of US companies that are building an open source or use open source or defend it. And then also people defending Chinese open source itself. Maybe not directly, but there's figures like David Sachs or Bill Gurley who both basically say competition is good, capitalism finds a way. If anything, we need to be pumping up the capabilities of US companies rather than focusing on Chinese open source. But I do think yesterday was significant because really for the first time, you see two very senior Trump officials. I guess Bessent actually did also the day before come out and criticize Chinese open source at a time when a lot of the tech community is trying to defend the ability of open source and make sure there aren't restrictions. But now you're really seeing these senior White House officials come out and use the distillation issue of Anthropic as the reason for saying we need to have some sort of restrictions or actions against Chinese open source.
I gotta tell you, the David Sachs perspective is kind of interesting to me here because he's obviously his term in government, whatever the cryptos are. What was the term exactly?
AI and cryptos are.
AI and cryptos are. Sorry, so that term has now finished, right? But it's kind of interesting that I was sort of thinking last night about, do you think he could be as outspoken on this issue if he was still holding that title within government? And, if he knew what he knew now about the position that certain people in government are taking, would he still have wanted that position or not? Because taking that position sort of to me felt like it was his reflection on the perspective that the government had taken towards crypto policy at that time, and it was sort of like, yeah, I'm on board with this. I think I'm here to sort of further the cause. I don't know, like, do you think he would have taken that position now, knowing what he does about how AI policy is shaking out in the administration?
It's a good question, and I think we have to remember the timeline, which is his special employee designation ran out in March, which is when he stepped down. He still is in this sort of semi-official position called PCAST, which is a advisory board to the president. From all we understand, he is still incredibly influential in these debates and is spending time in DC. But I think the other important thing to keep in mind is when he did take that position, and for really the first say year and a half of the Trump administration, AI was a more segmented issue that I think a lot of the senior principal officials in the Trump administration didn't really think about. And as we reported in our big story over the weekend, that really changed with Mythos in the spring, and this idea that or this growing realization, I think, among senior officials that AI was this huge national security issue. And
Right.
now Sachs, rather than really being able to have his own fiefdom in the White House figuring out AI policy, is competing with folks like Bessent to try and figure out what the future of AI policy is. So would he have taken the position now? I think maybe even more so, now that
That's true. Yeah.
it's
Yeah.
more of a turf war, and it's more important that his view is able to win out over other very powerful voices. But certainly he's not able to have, I think, as much direct influence as he did before.
Yeah. No, that's a good point. Last question for you. So now looking ahead, I mean, we had the executive order, and we've been waiting now for, I think, the guidelines on AI policy are basically supposed to get determined here in the next couple of weeks, right? And then following that, we've got a meeting between China and the U.S. as well. How do you think the Moonshot AI, Kimi K3, the discussions that you've reported on, how do you think all of that is going to impact the uh, framework for the AI policy that we're expecting, and then ultimately the China U.S. discussions?
Yeah, well, as you said, we're supposed to have this framework in early August. What I'm hearing is that it's likely to be delayed. I think there's fears that all this China open source debate is postponing that. Sort of how the export controls on Fable did. What was that, a few weeks ago? At this point, it's hard to keep track of time. So there's still, I think, a lot of optimism within the AI industry that the release of that framework, whether it be in early August or a bit later, will help create better rules of the road, at least for how US companies release models. But it won't answer the question of what to do with Chinese open source. Maybe there'll be something in it about protecting against distillation, but that remains a novel question that has to be solved. And would likely require some other type of policy, whether it's the entity list or sanctions or an executive order or a full-out ban. That remains to be seen. And also, as you said, there's now these looming talks with China on AI, which is set for September. I think one way you might look at this potential action is it's saber rattling ahead of those talks and basically saying we have this power to crack down, so be
Right.
careful. But at the same time, if they go too far, I think there's a risk of setting off a trade war or going to those talks in a bad position. But as we know, President Trump does like to have a forceful approach, especially in those types of bilateral talks.
Yeah, well, should be an exciting dinner conversation for them, I'm sure. Leo, I want to thank you for coming on. That is Leo Schwartz, our AI, tech, and politics reporter here at The Information. We're turning to a couple big quarterly results. Alphabet and Tesla shares are in the red today as investor concerns about AI spend overshadow different areas of growth. I want to start with Alphabet. To unpack the results, we are chatting with Dan Flax, senior research analyst at Neuberger. Dan, welcome to the show. It's great to have you here.
Great to be with you. Thanks, Akash.
So let's talk about the numbers. What stood out to you here from the Google results?
We're seeing very strong growth in cloud, which accelerated again. And I think that is fundamentally transforming this company. And as we look out later in the decade, you could see actually the cloud business approach the size of search. Of course, though, you have to pay for all that. And so you're seeing significant CapEx. They raised it again this year. Next year, I think there will likely be well over $300 billion in spend. And so this push and pull around the spending and the cloud growth, I think, will remain debated in the months and quarters ahead. But overall, we like what we saw, and I think the stock remains attractive at current levels.
Remains attractive, but it's down this morning. What do you think investors are reacting to?
I think it's the CapEx and the concern about this arms race and, of course, the negative free cash flow that results from this elevated CapEx spending. If we step back, though, and think about what's going on, the search business, I think, remains healthy. They are reinventing that again, and you have this ability to put longer, more complex queries into it. And so you get more value for the user on one side and more value for the advertiser with increased signal on the other. YouTube remains healthy. Their subscriptions are continuing to see nice growth, and of course, cloud. But the investment required and the concerns around when these investments will peak, I think, is pressuring the stock.
I want to get into the ads business in a moment here. As you well, actually, let's talk about the ads business. So, I mean, the ads business, it's still double digit growth. I think it was a slight deceleration from last quarter, although it's exactly where it was 2 quarters ago. So, I mean, it's still very strong. Are there any caveats here to the ad growth that you see that we should be flagging? And I say that because, look, the numbers are strong. They also have more inventory now with the AI overviews, ads play that I think many are expecting to be another avenue for growth. I mean, what caveats should we be thinking about here?
From a technology standpoint, there's some concerns that Google 3.5 Pro is delayed, and the company's talking more about the Gemini 4.0, and we'll certainly learn more about that in the months ahead. So there are concerns around their ability to keep up with some of the leaders with the models. From my perspective, I'm relatively comfortable given their performance, and in my view, the most important thing is taking the models and taking the IP and translating that into the product roadmap in search, and that is where we're seeing strong results. I think the competition is certainly going to remain fierce. You have OpenAI trying to build a digital advertising business, and of course, others see this opportunity. And so Google has to keep investing. It has to keep experimenting. AI mode is seeing good traction, and I think the experience has to continue evolving. So it's going to be in the months ahead, I think, a combination of the roadmap around the models, new product features, and really continuing to transform search to make it a richer experience.
How confident are you in the company's ability to get 3, 5, and then ultimately 4 back up to the top of those leaderboards that so many of us watch with respect to benchmarking? I mean, they've lost some top talent to OpenAI. Of course, they still have, I think it was, we were talking about it. I mean, they still have at least 1 or 2 Nobel Prize winners on their team. So it's not like they're hurting. But, I mean, they seem to have fallen out of favor here in the conversation around. So how confident are you that they can get those models back to the top?
With respect to talent, I expect many of the top researchers and scientists, they're being poached by the existing large public firms, and of course the private firms, some of which, as we know in the case of OpenAI and Anthropic, are enormous as well. And I would expect that to continue. That's been the history in the Valley, and I suspect that'll be the case for the foreseeable future. In terms of the models, what I think is important is that Google has to try to isolate the elements that are most important for its businesses and its products. And I think they're doing that quite well overall. There's improvement needed in areas like coding, for example, to keep up with what Anthropic is doing. But I think for what Google needs to do, they're making very good progress. I think the key is really balancing the cost the utility, and really the ability to infuse it into the product roadmaps. And the company has generally been masterful at that over time. I think the concerns, though, around the leaderboards around for the models, that's going to come and go in the weeks and months ahead, as it has been now for some years. But I think the
But you're
urgency
expecting them to
in Google,
you're expecting them to come back to the top of those leaderboards in
I
due
think they'll
time.
be amongst the leaders for some of their models. And for me, that is important. But what is most critical for the investment is translating that into revenue growth across its
Right.
products. That matters most.
Right. Hey, the headcount growth, they grew by 4%. Did that surprise you?
No, they've continuing to invest in technical talent and researchers. We talked about poaching talent earlier.
Yeah.
I think modest headcount growth is going to continue. If you're growing the cloud business, as one example, at over 80%, the need to invest in people and talent remains high. And so the key for Google is to continue to allocate its resources, its people, most effectively, and try to think through their ability to navigate the short-term pressures which all companies face, while continuing to invest for the longer-term opportunity. And that's tricky. And of course, you'll always have cyclical elements at play as well.
Right. I mean, and I hear you on the cloud growth, which is extraordinary. I mean, on the flip side, then you look at the margins, and I mean, the company's burning cash. Their operating margin also shrank a bit, and so that's sort of where I was surprised with the headcount growth. At least, I mean, you could see another flavor of tech company that lays off people to keep their margins in check. I mean, how do you square those two things?
So a couple of things. In terms of the cloud, the margins there expanded nearly 1,500 basis points. So you're actually seeing very good leverage, very strong returns from the cloud business.
Yeah.
More broadly speaking, though, the increase in CapEx and the associated depreciation, of course, compensation expenses, those are headwinds, and that's something the company is going to continue to work to optimize. I don't think there's an easy solution given the investments required to drive the growth. If I step back, though, and look at what's happened over the last several years, they've been building out new businesses. You're seeing it with cloud. You're seeing it with subscriptions in areas like YouTube. Search itself, it's this constant reinvention. And so the margin dynamics, it's something we watch very closely. But what will matter most, in my view, is the revenue growth. And finally, just to round it out on the free cash flow, we are in a period of aggressive investment, and I expect that to be the case for the foreseeable future.
Great. Well, Dan, I want to thank you for coming on. That is Dan Flax, Senior Research Analyst at Neuberger here on TITV. Tesla reported second quarter revenue jumped 26%, but manufacturing and AI costs mean the company is now burning cash. For more on that, I want to bring on Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management. Ross, welcome back to the show. Good to have you here.
Yeah, thanks for having me.
Okay, so what kind of a mood was Elon Musk in for this quarterly result?
I think he said something that he was like under the weather. So he was like kind of bowing off sickness. And it reminded me of the old days, in the old Tesla days, when I used to send emails to them like, it'd be better if you did the conference call with a little bit more positive energy, you know?
Right.
So, it wasn't the typical call in the sense of lots of ridiculous claims and optimism. So the sobriety, I think, hit the stock a little bit, today. So
Yeah.
well, Tesla's got a lot of challenges in front of them.
Well, and we'll unpack them in a minute. But what's actually coming to mind now is now we have we have earning calls probably 3 weeks apart with
Right.
Tesla and SpaceX, and so we actually have more of an opportunity to track. Hey, was this just a bad day for Elon? Was he under the weather, or is this a mood that he's in? This quarter, and so to the extent that people track that, I mean that's certainly more data. Let's talk about the numbers for Tesla. So what numbers stood out to you for this quarter?
Well, good or bad, so the good
Stock
numbers
is down, so I guess the bad ones.
right. Well, but the good numbers is that they're selling EVs. And I've been saying this a lot. Like if they just focused on their core business, they're kind of crushing it, like They don't advertise. The CEO turns off consumers, and yet their sales are still very strong. They still make the best vehicle. Services revenue up 50%. So you can see that Apple effect of buying a vehicle and then all the ancillary revenue they're now generating through charging and other services they provide. So the business model that used to be Tesla is continuing to work. They just stopped focusing on selling EVs and sustainable transportation. So the bad is the fact that robotaxi doesn't work. And so there's this like misperception that this massive scale is about to happen of all these cabs everywhere. But the fact of the matter is the software doesn't work yet. And so because of that, if you listen to the conference call, he does not want to be responsible for killing somebody. And rightfully,
Yeah.
and nor should Tesla be, I use the software almost every day, and it's not good enough to scale on a cab business as it is today. And so knowing that he's playing a risky game, because if he kills somebody, people are going to want to shut this down. But at the same respect, he can't really scale, and he's not getting the data he needs. And just putting one cab in a city with a small square is not scaling robotaxi. And so you see the increase in expenses involved with putting out logistics and all this kind of stuff and running a service, but the service doesn't generate revenue. So then there's that excess cost. And then Optimus is a cost that just goes on and on into the future, where we just don't know when revenue will ever happen. And saying they're going to manufacture this thing in a year is just absurd.
Well, and so they talked a lot on the call about building out the supply chain, and that's obviously
Right.
what they're investing so heavily in, and the reason why they're burning cash now. I wonder, as you look back on how they built the supply chain for the core automotive business, uh, I mean that business, like you said, now they've built it. I mean, they've
Well,
done
yeah,
it.
especially around batteries. Right.
Right. So, I mean, what do you think we can infer about this next big supply chain build from how they did the automotive build? I mean, does it suggest that they're going to do the impossible again? Is it a harder build? Like, how do you compare
Yeah.
these two?
Yeah. Building a human versus a car. I mean,
Yeah.
come on, dude. Okay. So I've spent a lot of time on this. A lot of time, because obviously I have to talk about it in the public a lot, and I'm not an engineer, so I don't like to approach things like I know engineering wise better than Elon. I definitely don't. Okay, so but what I know is about humans, and I know humans better than Elon. And if you look behind me, you see these guitars, and I can play guitar pretty well, and I've been doing it my whole life, and my fingers are just like amazing. Okay, you can ask my wife too. Like amazing. And so it's like trying to build this without any model. Like God was pretty good at making humans over millions of years of evolution. Hands are tough, feet are tough, and eyes are tough. And these are the three things that really make us special besides our intelligence. So when
Yeah.
you take out intelligence and you look at what makes humans really special, hands, feet, and eyes. Okay. And they're not going to be able to build these things. So most robots have been built with wheels or with tracks or other systems than walking. And I think they're going to struggle trying to build humans. And this could take a very long time. And even after they master it, what's the application? To me, folding clothes, spending $1 trillion to build a robot to fold clothes doesn't make any sense to me at all. Military, space, industrial applications make a lot of sense to me.
Right.
So where this goes, I don't know, but they're spending a lot of money and there's no revenue coming anytime soon.
Okay, so we've got SpaceX earnings coming up August 4th, the first quarterly result that everyone will be looking forward to. I mean, Elon was asked directly on the call about whether or not Tesla and SpaceX are going to be one company in the future. He dodged it. He turned it over to his general
Right,
counsel.
I saw that. Right,
I think it was kind of like, talk to the lawyers about it.
right.
He did say that there are more and more ways that the companies are collaborating, which you can read into that what you want. I mean, you have suggested on our show that it's inevitable and it's just a
Yeah,
matter
it
of
has to.
time. I saw a tweet that an X post that, hey, maybe Elon is not giving Tesla his all to bring down the share price so that it's cheaper for SpaceX to buy Tesla. Do you think there's any credence to that at
No,
all?
no. First of all, nobody controls the market, and the last thing Elon wants is his stocks going down. Okay,
Yeah.
remember
Yeah.
all of his fans, the few he have left, is predicated on this belief that Tesla stock is going to make them rich. Okay. And so when the stock, like his biggest followers, they own a lot of stock. I mean, we have some of these clients too. And it's like they won't diversify and they won't sell any of it. So it's like they're feeling a lot of pain on a day like today. And now, if you look at the 5-year return of Tesla, and I started saying this years ago, they basically have made no money in the last 5 years. And then once we get to November, Tesla hit its high 5 years ago at $400 a share, and we really have not held over that for any long period of time. So since he took his eye off the ball and bought Twitter and then created this SpaceX monster, basically Tesla shareholders have gotten diddly squat. And so, if you bought it at the right time, maybe you're up. But if you bought it at the wrong time, you're down. And
Yeah.
so if he loses these supporters, like he's got nothing left. So he needs the stocks to go up. And this is bad news for him. He's got a lot of pressure on him. And you can tell on the call, not everybody wants to take the pressure of the whole world on top of their shoulders like
Yeah.
he has. And he does this. So, it's on him.
Well, and to that point, I mean, if you look at the stocks, both Tesla and SpaceX have fallen in tandem, and you and I have talked a little bit about the possibility that investors in Tesla could rotate into SpaceX potentially. It doesn't seem like that's really happening.
I don't
Given
think
that,
that's happening. I haven't seen that within
yeah,
my own book. Like we're not getting calls. We're getting no calls for SpaceX now. It's funny. Before the IPO, everybody was like, Ross, how do we get into SpaceX, right? And everybody kind of thought this was just going to be free money. And I'm going on TV and on Twitter saying, hey, there's no free money.
yeah,
like there's a lot of reasons why this is going to be a difficult journey if you're buying out 135 or whatever. And we got the initial pop, but SpaceX was an $800 billion company just the other day, and if you go back a year and a half, it was a $400 billion company. So none of this should be surprising to investors if you care about valuations. They both trade at 160 times forward. Now I have to revise Tesla's earnings down, but like in essence, they trade almost at the same multiple. So if you merge them, theoretically, they are kind of valued similarly. It's kind of ironic at 160 times forward. But now Tesla's probably trading at more like 200 times forward. Well, it's gone down a little bit today. So, at some point, these stocks might be of value. But when you can buy Nvidia at 15 times forward or Micron at like 1 time forward, you know what I mean?
yeah.
It's like it's like insanity. And so I want to clue in investors to pay attention to this one little line that Elon said, and this is how I've made money in the last 5 years, listening to Elon, but not investing in Elon, is listening to where his money is going. And what did he say? He said he graciously thanked Micron for the allocation of memory chips for him to build his robot cars and such. And Micron is our top pick right now, and it has been for a while. It's been a wildly profitable investment, but it's still just massively undervalued because nobody believes that memory isn't cyclical anymore. Like they just don't believe it. So investors have this like amazing opportunity. Elon told you I've never seen him so deferential.
What he's buying,
Yeah,
right?
like
Right,
thank
right.
you, Micron,
Yeah.
thank you. Because if he doesn't get those memory allocations, he's not building anything.
So then, on the topic of chips and the chip build out, then we had reporting earlier this week that SpaceX AI is now looking at a 4th facility in Texas. This would be, on top of the Memphis facilities that they're building right now. And it sort of clued us into this idea that, well, to what extent is he thinking of SpaceX AI as a neo cloud offering in the world where Grok is not really getting the demand that he would have liked? Did that surprise you? Do you think it's likely that he turns SpaceX AI into a neo cloud offering just to fund his orbital data center ambitions? What do you think?
I mean, I think he views like building compute is whether I use it or I sell it, I win, right? Like demand for compute is off the charts. You can listen to Wall Street or you can listen to people in the tech industry. If you look at like you guys are listening to people in the tech industry and they're telling you we need compute, like we just cannot keep up. If you're Anthropic, you cannot keep up with compute. You know what I mean? And so they can't lose. And if you really look at what SpaceX is, it really is a neo cloud. They just want to do it in space. And so Grok is being integrated. So the new version of Tesla software includes Grok now actually working as the operating system for the Tesla car. So before it was like 2 systems on the car and it was super dumb. But now Grok is starting to do things where you can ask Grok to open the glove box or change the music or something. So Grok has a purpose within Tesla's ecosystem. It's really cool to have an AI operated car, but will it use the compute that they're building? No, no chance. So they're going to sell compute, and then they're going to put data centers in space at some point, and then they're going to sell compute more, and
Yeah.
then they're going to build a terafab so they can be a completely vertically integrated AI company. And I think that's why SpaceX is so much more attractive than Tesla at this point, and that's what creates this huge problem. So if you look at my SpaceX holding versus my Tesla holdings, I own 10 times more SpaceX than I do Tesla stock.
Last question for you then, as you look at the SpaceX share price ahead, as the lockups continue to expire, and they'll expire at least as the first quarter wraps up here, what are you expecting in terms of insiders selling as that lockup expires?
Well, I won't be selling mine, but I know insiders will be selling some of theirs. I don't think, we work with SpaceX employees, and they're just an incredible group of people. And these are not people that go out and spend their money on Ferraris and stuff. These are people who are 100% dedicated to building spaceships and stuff. And so to them, having a lot of money is nice, but it's not like, when you think about like crypto guys spending money, that's not the group here. And so these are people that will take money off the table to be prudent, and that's what we're advising our clients. We're advising our clients, if you made $10 million, take 5 of it and be done worrying about money and let the other 5 million ride. I mean, having 5 million in SpaceX is, that could turn into 50 million, that's great. And they have great jobs, but you've got to diversify. And so that's going to happen over the next 6 months, is that SpaceX employees, but worse so, there's many people who got in early on SpaceX, like a year ago, in these like investment vehicle products that were being sold to lots of investors, like buy SpaceX through us and 2 and 20 wrappers. And there's a lot of people in these products, and those people are going to want to liquidate, get their fees, and pay off their investors. So there's just a lot of supply that's going to come on the market any way you look at it. So for me, I'm excited about
And
it.
it's, I mean, it's already below. It's
Yeah,
already
I'd like to
below
buy
the
SpaceX
IPO.
at $50. You know what I mean?
Well, yeah, 50. That's a good
That's
price.
what I got it for. That's what I got it for when I bought it.
Yeah,
So,
yeah. Well, I think it's at like it was 135 is where it debuted.
yeah, 135 is 111 this morning.
Yeah.
And, at that value, so if you just do traditional valuation metrics like 10 times revenue, you could get a substantially lower price. If you do 20 times revenue, you could still get a substantially lower price. So that's the way I look at it.
Great. Well, Ross, I want to thank you for coming on as always. That is Ross Gerber, President and CEO of Gerber Kawasaki, here on TITV. The Information's Yueqi Yang published the most recent look at Stripe's latest financials. It has been a monster year for the company. I want to bring her on to walk us through what she found. Yueqi, welcome back to the show. It's great to have you here.
Hey, Akash.
Let's start with the revenue. What did you find about Stripe's top line?
So we learned that Stripe is practically printing cash. Its revenue last year surged by 1/3 to $6.8 billion, and its free cash flow more impressively rose by more than 50% to $3.2 billion last year.
Wow. And the valuation, what's the latest valuation for the company now?
Stripe was most recently valued at $159 billion in February in an employee tender offer.
Okay. So let's talk about the growth then. Where is that growth on both fronts coming from?
Yeah, I think Stripe is really benefiting from this whole AI boom because it positioned itself to be at the center of all this payment traffic going into big AI companies like Anthropic and OpenAI, as well as this whole long tail of AI labs that are popping up. And that helps explain why Stripe is seeing so much growth with its revenue last year. Based on the numbers that we've got, last year's revenue growth was the fastest since 2021, when Stripe benefited from a pandemic e-commerce boost. So this is a company that's still pretty much at the center of innovation in Silicon Valley, where all these AI companies are seeing surging sales, and Stripe is riding alongside with them.
Now, on the free cash flow growth, it has to put that somewhere. And we obviously have the reports that Stripe is looking to partner with the private equity firm, I think it is, on buying PayPal. And we've talked a little bit about that on the show, and I'm sort of less concerned on whether or not you think it's a good deal. And I'm more interested to know, is Stripe definitely looking to make acquisitions according to your reporting?
Well, the PayPal offer was really what prompted us to look closer into Stripe at this specific moment. And that's how we realized that Stripe has really had this banner year in 2025. And that really helped set it up to make aggressive acquisitions going forward. And it already had made two big acquisitions at $1 billion range in the past year. One is for a stablecoin startup called Bridge. Another one is for a billing startup. So based on the report, it seems like Stripe is looking to make bigger swing in the acquisition place, and PayPal is an attractive target for Stripe, in part because of the consumer business that PayPal has, which Stripe doesn't really have a big presence in yet.
Right. And this was another point that you made in the story, that it's now trying to diversify away from just businesses and towards consumer payments. I mean, is it just diversification? Why do you think they're really hoping to pursue that strategy?
So payments historically is a thin margin business. Usually payments companies only take a small cut of the transaction that they help process. And going into consumer business is a way for Stripe to maintain or increase its margin. And that's because if Stripe is able to shift more of its volume away from credit card transactions and more to direct pay by bank transaction, meaning that consumers are paying for purchases directly from their bank accounts, then Stripe is able to lower the cost for the transaction that they process, because they can avoid paying Visa, MasterCard, and these credit card networks a high fee that eats into its margin. And that's why we mentioned in our story, part of the overall goal of Stripe has been to counter any pricing pressure on its margin. And in order to achieve that, they're hoping to be able to shift more volume flow into pay by bank transactions. And to do that, PayPal is a good asset, because a lot of these PayPal wallets and Venmo wallets are directly linked to people's bank accounts. And
Yeah.
these transactions are processed without relying on credit card networks.
Maybe they can fix Venmo, like maybe I mean it's kind of a pretty odd app if you think about it. In my opinion, it works. I don't know what your experience is, but like it's always breaking on me, and the UI hasn't changed for a while.
Well,
Maybe they can fix it.
yes, well, Venmo is an interesting business, but it's also facing competition from Zelle.
Yeah.
And yeah, so but
Yeah,
still,
I don't know that my Zelle works that much better, to be honest, but fine, whatever. I mean, the
But
better
yes,
it.
but Venmo still is very much a consumer brand. And people like you and me think of ourselves as a Venmo customer, and we don't
Yeah.
really ourselves as a Stripe customer. And that's why for Stripe is they wanted to have a piece of assets where they can build a direct relationship with.
Well,
Um,
and I'm actually just thinking about this, have you ever tried Apple, like, not Apple Pay, but you can send money through iMessage now, right? With, like, Cash Pay or something like that, isn't that
yeah,
what's another.
I know all functions like that. I've been invited to receive money that way, and I told the person to just send it to Venmo, which I already have.
Right, yeah, because it doesn't seem like a scam then. It's like, just Venmo it to me. Hey, very quickly, so, I mean, we talked about Bridge, we talked about, the pivot into consumer. Is there anything else that you think Stripe, could look to buy, anything to diversify its business outside of fintech broadly? I mean, you had some interesting ideas in your story.
So Stripe's priority right now is very much to position themselves to be at the center of AI economy. And increasingly, people are paying for AI models not directly to OpenAI or Anthropic. They're paying for these AI routers, which aggregates a wide range of AI models so that they can direct you to whatever AI models that offers the best value, the best price for a specific task that you want AI to carry out. And that's a way for people to really lower the cost of AI. And there are a few companies that are getting serious traction in this space. The most popular one is called Open Router. And this is a company that we recently reported has been getting acquisition interest in the range of billions of dollars. Um, and it shows that the traction that router business has gained in the AI economy. And Stripe itself recently launched a similar service called Stripe AI Gateway, but it's a much smaller business than Open Router. And I think this is the area where Stripe is definitely laser focused on, and it could potentially show more interest in investments or acquisition.
Right. And I saw a pretty interesting post on X about Ramp also announcing sort of I don't know exactly what it was, but it was I think it was called Ramp Router, where it was basically, something to do with, helping people manage their AI costs and routing, stuff like that, and the post said, "This is what's called pre-selling," where people are expecting Open Router to maybe get acquired according to our reporting, and they're sort of expecting a vacuum of demand to exist, and so maybe why not get out ahead of it? So it's certainly an interesting opportunity for fintech companies to move into. Yueqi, I want to thank you for coming on. That is Yueqi Yang, our crypto reporter here at The Information. Anthropic is taking a novel approach to employee share sales as it seeks to go public. That is according to exclusive reporting from my colleague Corey Weinberg, our senior reporter covering Anthropic. To unpack that story and the broader context, I want to bring on Jason Dean, our San Francisco bureau chief. Jason, welcome back to the show. It's great to have you here.
Good to be here, Akash.
Okay, so Corey did some great reporting. I want to unpack it with you. What is so unusual about how Anthropic is approaching these share sales for employees?
Yeah, so any company that is going public has to think about how insiders, executives, employees will be allowed to sell their shares. Generally, that is done by having windows for the vast bulk of employees, windows after the companies report earnings of several weeks when they can sell at their discretion. Some companies have what's called a 10b5-1 plan for generally only though for top executives, board directors, people with access to the most insider information in a company, and that's done to try to prevent any potential insider trading, illegal insider trading, or the appearance of insider trading. What Anthropic is talking about internally and with their advisors is having a 10b5-1 for all employees. Now, they haven't decided to do that, but they are considering it. That would be very unusual.
10b5-1. So is that the same? So are we talking about share sales before an IPO or after an IPO?
This would be after the IPO,
Okay.
and these 10b5-1 plans, they're basically preset plans for stock trading. So you decide, I'm going to be selling this amount of stock under these conditions over an extended period of time. So there are no decision or appearance of a decision based on particular events. They're scheduled trades over time. And so the idea is that, again, you use those in a number of companies for top executives, but in this case, they're talking about the potential of doing that for all employees in Anthropic after the IPO.
And why does Anthropic want to pursue? Why might they want to? Are they more transparent than other companies with respect to how much information they're doling out to their employees?
That has been the case, yeah, according to Corey's reporting. And, Dario Amodei, the CEO, is pretty blunt internally. He shares a lot of information. And so part of the calculus here is this might be the best way given the way the company disseminates potentially market sensitive information to a broader group of employees than might be typical in publicly traded companies. This might be a way to prevent any, again, appearance of insider trading or actual insider trading that could clash with the law.
Do you think that Dario's approach is gonna change at all after he goes public? Like, what do you
It's a great question. I don't know. I
I
mean,
wonder. I mean, when you're a public company, we've seen other CEOs change their tune, right? But
for
he's
sure.
pretty but then there's Elon, right? Then there's also Elon that, he has been slower to change his tune. And
Well, I
then
mean, Elon's method of disclosure seems to be to say whatever he wants, whenever he wants on Twitter.
yeah. Yeah.
I think it'll be interesting to see whether Dario's approach to sharing information internally will whether he'll need to modify that. Not only because they're expected to become a public company, the IPO we've reported could happen as soon as September. But also just because they're growing so quickly, and obviously maintaining that level of discretion in terms of what internal information employees share outside gets harder as the number of employees increases.
So let's talk about the different stakeholders here. So if this plan were to be put in place and there had to be a preset uh, share sales schedule for all employees, I want to talk about what that would mean for the employees and then what would that mean for the investors. Um, I mean, let's just brainstorm here. If I'm an employee at Anthropic, which would be a great job, I think this time. Do I like this? Am I a fan of this? What do you think?
I think it's possible. So the plus is employees also don't want to run the risk of getting in trouble with the law. For even if people are not doing not intentionally trying to break the law, they can get in trouble with insider trading regulations because obviously employees can have access to what's called material non-public information. So setting these up kind of does a lot to preclude the risk of getting stuck in a messy legal situation. On the other hand, it obviously limits flexibility to and discretion to trade whenever a person wants. So you suddenly fall in love with that dream second home as a newly wealthy uh, tech employee, and
Second
you need
home,
to,
right?
yeah,
Yeah.
yeah, presumably, and you need to sell some stock to afford the down payment, or you're going to pay cash for the whole thing, whatever the case may be. You have less of an ability to just go out and sell a chunk of shares
Yeah.
at a particular moment. So it's
I mean,
it's
I
uh,
feel
it's
like
two
it's a
edged.
little. I feel like it's a little annoying, to be honest. Like like I maybe if I look up to Dario, I think he's a great CEO, but then he's putting all this stuff in Slack. I mean, I feel like if I was an employee, I'd be like, hey, can you just keep it to yourself a bit so I can manage my,
Could
my
feel a little paternalistic, yeah, if you're an
yeah.
employee there.
I don't know.
I should say, like, some of the companies that have, and there's not that many actually. Corey's reporting shows there's about 13% of S&P 100 companies have these plans for even C-suite and directors, high level employees and directors. But in many cases they are voluntary. So there are people who opt into these for the reasons I was saying a moment ago.
Right.
But yeah, some people may find it paternalistic and restrictive, and that calculus could affect their decision about whether or not to actually proceed with such a plan.
But also, it strikes me that this is good for investors then because it prevents the sort of mass selling when the lockups expire, right?
I think, well, yes. The issue of what the lockups are, like what the timetable is for employee lockups post IPO, that is those periods before insiders, whether they be employees or early shareholders from outside the company, are allowed to sell their stock after the company goes public, is somewhat distinct. But at a minimum, a plan like this could smooth out selling so that it's sort of more regularized over time, and you don't have selling in bunches by insiders that's driven by events or just happens in these narrow windows that can affect volatility.
Great. Jason, before we let you go, I do want to ask you very quickly about another story that we published. So Jyoti Mann is our Meta reporter, and we're going to start calling this Jason's Corner, where you come on and your reporters are doing such a good job doing the work that they don't have time to come on the show, and you get to come on and tell us what they've been publishing. She had this great story about Meta trying to find ways to lower their costs with model routing, which is what we were talking about with Yueqi. What did Jyoti find in her reporting?
Yes, yeah, it is a privilege to come and be able to talk about the great work of these reporters. Jyoti found that so Meta has been changing its structure internally, setting up new teams to try to increase sort of innovation and product and tool development around AI. And they've set up something called AI Labs earlier this year, and it's kind of an internal skunk works for AI focused projects. And one of these is a model router, just as you and Yueqi were talking about. That's become a very hot area. Meta, as we know and has reported, is a huge user of AI. They spend a lot of money on this, and they've been trying to rein in their own costs. And so this is partly designed to do that. As Yueqi explained, these model routers can lower costs by taking some tasks that you don't need to send to the most cutting edge frontier model that has the highest per token cost. You can send some of these to older or simpler, smaller models that can do that particular task just as well. So they've been developing a tool like this that could be used internally and that they could potentially release as a product as well. So that space is heating up. You and Yueqi talked about a few examples. Cursor also is announcing a new model router, so that space is gotten very hot very quickly.
How many people have they dedicated to this effort? Do we have any idea of how far along it is?
It's pretty small, and these projects, there are like 200 projects that have been approved out of this skunkworks. So it's fairly early stage. That they bless these to put small teams on them to continue to develop them, and then at a later stage they'll decide whether to turn this into something bigger.
Great. Well, Jason, I want to thank you for coming on as always. That is Jason Dean on Jason's Corner here on TITV. He's our San Francisco bureau chief. Thanks for coming
Yeah.
out. We will see you very soon.
Thanks.
That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on TikTok, and on LinkedIn. I am already excited for our next show tomorrow. Have a great rest of your Thursday. Bye-bye for now.